Hello everyone, we'll be starting in about 5 minutes from now. Can you please raise your hands if you can hear me, the ones on the Zoom call? Awesome, thank you. Great. We'll be starting in about 5 minutes. We're waiting for some more people. And once they join, we'll start. For those who have just joined, we will be starting in about 3 more minutes at 12:05. All right, so let's begin. Please use the question and answer pane to ask any questions that you may have, and we'll have some time dedicated for Q&A in the middle as well, I'll take a few pauses to check if you have any questions. We'll take questions then, and towards the end of the session also we'll have a dedicated Q&A session. So uh, please use the Q&A tab to type in all your questions, and I'll be happy to answer them intermittently. Before we begin, thank you everyone for joining. My name's Mohil Pujara. Let me turn my video on. All right, we're set. Um, we're going to go through this course that EduPristine provides. It's called Financial Modeling. And the objective that I'm here today is to walk you through some career options that are available to a person who does this course. We'll be going through some of the career options. I'll be walking you through some content. I'll be trying to give you some insights into why is this course important, what are the benefits you can receive from it, and then you can take a decision whether these career options are something you want to really build a career on. Is this the direction you want to move in? And we can take it forward from there. But the objective of the session today is first to introduce you to the topic of financial modeling. Once we introduce you to the topic of financial modeling, we'll also give you some background about EduPristine as an institute, the kind of course EduPristine has, which may help you taking a better decision if you want to join this course or not. Before I begin with the core content on why we're here today, let me quickly introduce myself. As you must know by now, my name is Mohil Pujara. I'm an MBA in finance from Symbiosis International University. I've also done a course in advanced analytics for management from IIM Ahmedabad. I've been working in the industry for the past 9 years now. I've been with a couple of different companies. One company is called Aspect Ratio, where we're really heavily into modeling and analytics. And the other company that I worked for was Vodafone, which was about a few years back from now, when where I supported the launch for 3G in Maharashtra and Goa. So it was a while back. We're in 4G now, so and 5G to launch soon. So it was a while back. So yeah, that's background about me. And let's begin. Can we have a quick show of hands? How many engineers in this session without any background in finance? I have two people, three people. All right, three people. So most of the people on the call looks like you have some sort of background in finance. It can be BCom, it can be BBA, it can be CA, CFA. Any sort of background in finance helps. Some people may be MBA as well. For those people who do not have a financial background, I'll try and keep terms as simple as possible, but there will be some finance terms that we'll be using throughout the session. But if there's any question you have at any point in time, feel free to write that in the chat window. All right. With that, let's begin. All right. Like I said, we have 3 points on the agenda today. We'll go through the financial modeling program outline. I'll try to give you an idea about the different careers in finance that open up once you have this skill set called financial modeling. Then we'll talk about EduPristine, and then we'll talk about contact information. Uh, what is financial modeling? All right, now it's one of the most widely sought skills in the finance industry. It is essentially building models, and when we say building models, what do we mean? I like to categorize a model as something very simple. A model is anything that can take certain inputs and give me certain outputs. There's this whole set of processing that happens in between, which is where our modeling, that processing bit is what the model core capabilities are. But we usually have, in the field of finance, we usually have a lot of information which we have as inputs. This information can be anything. If I'm doing valuations of a company, this information can be information like P&L, balance sheet, cash flow, any and everything in the domain of equity research to do with the company. The kind of information you find in an annual report is information that is an input to the model. If you're doing a capital budgeting exercise for a corporate, or if you're working on a project for a corporate, a big corporate like Reliance, your inputs are different. You take inputs in terms of what is the asset you are looking to purchase, what is the cost of that asset, what is the revenue potential of that asset. So there's these ton of inputs that you get in capital budgeting or project finance decisions as well. There's this whole set of processing that you do, which is build models where the data flows easily from one stage to another, gets processed, and I'll talk about what this processing means. And then eventually we need an output. This output is something that will help us in decision making. What kind of decisions? We can have a very simple decision like an investment decision. Yes, I should invest in this particular company, or no, I should not invest in a particular company. It can be something like investing in an asset. Yes, I should invest in this asset, I should not invest in this asset. It can be something which is a financing decision. I should go ahead with debt instead of equity, or I should go ahead with both, but here's the ratio. I need 30% equity and 70% debt. So all these different financing decisions can be answered using the models that we build to analyze all the information that we have. And we can create models that are flexible and dynamic enough so that in this ever changing dynamic world, when someone comes and changes any um, inputs, or there's a change, like there's the pandemic that hits, how does that impact our models, how does that impact our view of a particular company? Because we built this whole model which is flexible and dynamic, we change inputs and our outputs automatically update, and now we focus more time on decision making rather than building the whole model from scratch whenever there's an event that occurs in the market. So that's essentially what I mean by financial modeling. I'm going to show you some use cases so that it becomes easier for you to understand. For people without a lot of background to finance, a lot of the terms that are used may be something that you're hearing for the first time and you're not fully aware of. So I'll be using some examples to walk you through what I mean when I say equity research, when I say capital budgeting, and all of that. So that's the whole crux of financial modeling. Uh, Let me go to the topics to be covered first, and then I'll go to eligibility and all of that later. The first and foremost skill that you gain by doing financial modeling is you need to learn Excel skills. Sorry, let me take a step back here. What When we talk about modeling, we talk about building Excel based models. So in this course we'll be covering day one, we'll be covering Excel based workshop, where we'll teach everyone some basic level of Excel formulas, shortcuts, functions, etc., so that you can be at the same level as your peers. We get a very diverse set of students. We get students who are working in the industry. We also get students who are still studying MBA or studying BCom or BBA. People who are working in the industry are more exposed to Excel than probably someone who's still a fresher starting out or still studying. The intent of the first session is to make sure everyone's on the same page with respect to the basic Excel functions. So that's what we cover on day one. Uh, on day two, three, four, and five, we build something called as an equity research or a private equity model. That is the first career option that opens up when someone has this skill on financial modeling. What does equity research mean? Uh, let me let me open uh, this particular report, which is called a equity research report, and it's from a company called HDFC Securities. I'm sure most of you would have heard of HDFC Securities. This is a report on a company. It's an FMCG company in India called Dabur India Limited, and this report says that the current market price of Dabur India Limited is 327 rupees, and they are giving a recommendation saying that buy the shares of this company at the current market price and add on dips. Uh, add-on dips to 320. So they've given a range that as long as the share price is between 302 to 327, you should buy the shares of this company. The target price that they're expecting is 401 rupees in 4 quarters. Mind you, this is not a current report. This is a report from 2018. So this is no stock recommendation in any view point. For today. This is a report that HDFC Securities created for Dabur India in 2018. When the share price was around 327, they recommended a buy and gave a target of 401 in the next 1 year. So this report that you see here is called an equity research report, where companies that are in the equity research space, and we have a ton of companies here. We have companies like JP Morgan, Morgan Stanley, Citibank, Barclays, Credit Suisse, SVB, Leerink. There's a ton of companies that operate in the equity research space. Their objective is to study other companies that are listed in the stock market and provide a recommendation on whether to buy, hold, or sell. In doing so, they also provide the investment rationale on why are they thinking that the share price of Dabur will go from 327 to 401. So they give this whole document where they give the rationale and their assumptions behind why they think Dabur is going to do well and the share price of Dabur is going to increase. Now, in doing so, HDFC Security has a model that works in the back end. All of these analyses and recommendations are not based on gut feeling. They are based on some analysis and a financial model that uh, throws this recommendation of 401 to the customers. HDFC Securities, it is very important for them to get the recommendation right, because based on the recommendation, they will have a lot of HNI clients. Mostly their clients are not people like you and me, they're not retail investors. These are either HNI clients that have crores of rupees, or these are corporates that again have a ton of money on their balance sheet. Which they want to park somewhere for some time because they don't need that money right away. So they really have high net worth individuals as their clients, and there's a lot of money at stake. So any recommendation that goes wrong, it actually has real consequences in terms of money to their clients, and they may lose all their business if they come up with the wrong recommendation. So why is HDFC Securities confident enough to put it on writing in paper and create a report where it says that the client should buy the shares of Dabur? Because there's a financial model that goes in the back end. Let me show you now how this financial model looks like. So I'm just giving you an example of a financial model. A financial model is a set of different calculations that take place to finally arrive at a particular share price. So there's this entire um, set of math, science, art, whatever you want to call it. It's a mixture of all three that you need to follow. There's this whole set process, very robust process, which you follow, and you get to a share price recommendation for the company that you're valuing. In this case, this is not a model for Dabur. It's a model for a company called Niharika Consumer Private Limited, it's a private equity case. But here the share price of the company is coming to 28 after building a whole model, and we're not going to get into details about the model because that's not what we're here for today. uh, but but how do we get to the share price of 28? So we have this whole P&L, balance sheet, cash flow, equity, working capital, term loan, asset schedule, cost build up, revenue build up. We have a lot of modules that we need to build, which eventually factors into the share price of the company. So we look at revenues, we look at cost, we look at assets, we look at loans, we look at taxes, we look at everything in detail, eventually build this model out, so that we have a robust recommendation here, because based on this recommendation, a lot of investment decisions are to be made. When we talk about modeling, I spoke about two things, right? Input and output. Over here in this particular model, the assumption sheet is my input model. The DCF valuation sheet, the discounted cash flow valuation sheet, is my output, which is where I get my share price, and then I can create some reports, I can create some dashboards based on my liking. We can do all of that later. I'm just talking about the core output, which is getting to the share price, expected share price of the company. Now, if the way we build models is, today you take a certain assumptions that, say, the price of soap is going to grow by 5%, 5%, 2%, 2%, and 3%. What if the price of soap is going to increase, and the company has announced that they will increase the price of soap by 10% instead of 5%? And that will eventually mean that the volumes go down by, they won't go down by much. Maybe they'll go down by 1% only, the growth rate in volumes. But they don't expect the increase in price to have a lot of impact on volumes, because they have sticky customers and the customers are going to stay with them. Now that this assumption has changed, we don't want to go ahead and update all the different sheets wherever this may have an impact. What we want is, we want to build a model where I directly go to the DCF valuation sheet and my share price updates based on this new information. So you see, it went from 28 to 41 based on the assumptions that I changed about 10 sheets back. That's what we talk about when we talk about modeling. We have these whole set of inputs that we build. We have an output, but we've built this whole model that can directly go from the input to output in seconds. I make a change in the assumption section and my output updates almost instantaneously. Why is there a need for financial modeling as a topic? Because in the industry, we currently lack professionals who can build robust models like these. And whenever they go into meetings and the manager or the client asks them to change a particular assumption, they say, give me a week, I will rerun the numbers and get back to you next week. But if you know the right set of tools, you can just update the number then and there itself on the same meeting and show the impact on that same meeting. Does that make sense? I'm going to pause here to see if there are any questions. Uh, I think I have a question from Bagban. Bagban, I'm going to unmute you for some time so you can ask your question.
Hello.
Hey, Bagban, I can hear you.
Yeah, hello, sir. Good afternoon.
Good afternoon. How are you?
Yeah, I'm fine. What about you, sir?
Doing good.
Very good. So thank you very much. Session is very much informative. So I like to know, like, this is only the financial modeling about this thing, what you are talking about, or anything can be modeled in this?
There are a lot more things, Bhagwan. I've just started, so we'll be covering a few more examples of where all financial modeling can help. This is just the beginning.
Okay.
Yeah.
So one need to have expert knowledge in Excel, then only they can do the financial modeling.
No, not necessary. I have this slide on eligibility criteria, which I'm going to walk you through in some time. It is kind of recommended but not compulsory. But I'll talk to you about the eligibility criteria as well. That's on my list list of things to cover.
Okay, thank you very much.
Awesome. Yeah. Perfect. And I got a comment from Saumitra that says that the Excel sheet looks a bit intimidating, but don't worry, Saumitra, we have about 5 sessions to cover that in the course. So it is a lot of work. I'm not going to say it's easy and it's not a lot of work. Requires effort to build a model like that. And hence we're giving that the required time in the course. We start, actually, this should be day 2, 3, 4, and 5. So there are 4 dedicated sessions, and each session, mind you guys, is a 5-hour session or a 5-hour workshop. So we essentially spent 20 hours together building this whole model that I just showed to you. So that's the first career option that opens up when you know financial modeling, because equity research is a career that needs people who know modeling. If someone does not know modeling, that means that it's going to be very difficult to break into this particular industry. The second area where financial modeling is really helpful is this field called project finance. Does anyone know what project finance is? Any ideas? Anyone from the audience? Yeah, Nikhil, go ahead.
I think project finance has to deal with when companies engage in certain projects, like maybe it could be some expansion project or some kind of replacement of assets project. They engage in project financial modeling to determine whether or not whether or not the project is feasible and whether it's worth it or not.
Awesome, perfect. That's what Nikhil just said is a part of it. Great answer, Nikhil. So there are two parts to projects. One part is what Nikhil said. I'll get to that in some time. But the major part when we talk about project finance is talking about infrastructure sector. When we typically refer to project finance, we're referring to projects like building a highway, building roads, building a railway network, building a metro, building a BRTS system. These are all public infrastructure projects that require a lot of time, effort, and energy to build, and also a lot of money. Now, what is the field of project finance? The field of project finance is one where you are deciding as a construction company or as a party, one of the parties to the whole infrastructure development, whether you want to go ahead with a particular project or not, and if yes, what do the financials of that project look like. Only when the I think the economics here are simple. As long as the money that you're making from a project is more than the money you are spending in setting up the project, uh, you should go ahead and invest in that project. But because these projects are 10 years long, sometimes we take several years to build, sometimes we take 10 years, 15 years, 5 years, bridges take longer. So you cannot just simply subtract uh, all your cash outflows from your cash inflows. There's a concept called time value of money that comes into picture. So in project finance, we look at one, how to finance infrastructure projects and whether we should get into a particular infrastructure project or not, whether we'll end up earning money from that project or not, and if yes, we should go ahead with it. Also, we take a look at different things like what is our risk appetite, what is our capital allocation. All those different questions are answered. And then the second part of it is more of capital budgeting decisions or investment decisions, what Nikhil explained. Sometimes you need to purchase a new machinery. I was in Vodafone. The most common decision we took was where to install a particular tower, because a tower costs 75 lakh rupees to install. So that's an investment that we're making, so we want to make it in a place where we get maximum revenues from. So these are all decisions where there's a very heavy cash inflow at the beginning. You're spending a lot of cash at the beginning, you're making a huge investment, but the benefits of that investment come across many years to follow. How do you ensure that the benefits you're getting across many years is higher and much better and meets your expectations than the initial investment that you have to make? So that's kind of what project finance is all about. um, what we'll be doing in project finance is building like this case study, where we'll build different activities in the project. We'll build a Gantt chart to see how the project is going to pan out, and eventually we'll be building like this whole dashboard where we look at different parameters like what is the NPV of the project, what is the IRR of the project, what is the payback period of the project, what is the exit value that I'm quoting. And based on the kind of decision parameters, these are some of the most important parameters you look at before making a decision on whether you want to go ahead with a project or not. What do these parameters mean? Does an NPV of 0.34 mean I can go ahead with that project or not? What are the alternatives I can consider? So those kind of things come in the project finance stage. We'll be also looking at scenarios, because today, like I said, your a project can take up to 15 years to execute. So you take certain assumptions today, but 15 years down the line, the entire dynamics can change. So importance of building different scenarios is that much more critical, because now you're also looking at different possibilities in the future, and how much money will we make if one scenario becomes true versus the other. What if you're in a meeting and your client asks you to revamp all the scenarios. They want to change different scenarios, like they want to change capital expenditure, they want to change construction period. So we give them features like click on a button, you enter the assumptions that you want to, and you click on OK. Let me say I'm just changing the exit value from 10 to 100 and clicking on OK. My NPV IRR have been updated on the fly. So we're going to build models that allow us to do things on the fly. And trust me, people, I've built these models. If you build these models without all these buttons and fancy features where they're dynamic, it will take you the same amount of time as it will take you to build them with all the features like the checkbox, the macros that we have here to run simulations, to update buttons. You'll take the same amount of time. But if you build them manually, hard code them without formulas, if your model's not flexible, then someone asks you to make a change, you need to go back and ask them for a week to build a new model every time, which is what the industry right now does not have time for. We want to spend more time making decisions than churning data. And this whole skill set of financial modeling helps you build models so that anything changes, you make changes in the assumption and your output updates accordingly. You don't need to really go back, ask for an extra time to do that assessment. So that's kind of the second area where where financial modeling becomes very important, and it opens your doors to this whole field of project finance and capital budgeting. Where do you see these jobs? These jobs mostly lie with corporates, where there's this finance team that usually takes all these decisions. There are consulting companies like Deloitte, the Big Four, that also help out corporates with these decisions. So those kind of gates open up once you have the skill set of financial modeling in the project finance domain. Then we have another career that opens up in investment banking. And in particular, I'm going to speak about mergers and acquisitions, which is the next part or the next topic that we cover in this course. Now, mergers and acquisitions, let me show you an example here. Um, Most of us must have heard of these two companies. One's called Microsoft, the other one's called LinkedIn. Both of these companies, until a few years back, were separate companies, had different managements, had different uh, teams that built these companies. But in about 2016, around 2016, both these companies decided that Microsoft and LinkedIn will merge together. It was a deal where Microsoft acquired LinkedIn. Uh, what are the financial decisions that need to be considered uh, when Microsoft decides to acquire LinkedIn? Um and here are some parameters of the deal. Microsoft decided to acquire LinkedIn for $196 per share of LinkedIn. How did Microsoft come to this value of $196 per share? Why not $200 per share? Why not $150 per share? And mind you, at that time, the shares of LinkedIn were trading at around $130 or $120, something in that range. So Microsoft gave them a premium of about $70 per share and ended up giving $196 per share. So what was the math that went behind deciding that Microsoft should acquire LinkedIn at $196 per share? What is the uh, model that helped inform that it should be an all cash transaction? A merger and acquisition can happen in two ways. One, Microsoft pays all the shareholders of LinkedIn cash for their shares, or Microsoft gives shareholders of LinkedIn shares of Microsoft. So how do they decide whether it should be an all cash transaction or should it be a stock transaction? um, and the overall valuation was 26.2 billion. How did they again decide that the valuation should be 26 billion, not 30 billion, not 20 billion? So this whole area of modeling that helps inform these parameters in a big deal like this are basically parameters that we learn to model um, in the M&A part of financial modeling. There's another aspect to this. Now, Microsoft sells 20 billion of debt to fund LinkedIn deal. So, out of the $26 billion, Microsoft said it's an all cash transaction. There were two options again with Microsoft. They can put all these cash from their own pocket, or they can take a loan. They eventually decided that they'll put 6 billion from their own pocket and they'll take a loan of 20 billion dollars. How did they decide how much loan to take and how much of their own money to put into this? So all these different decisions are extremely critical to a particular deal and the success of a deal, because even if you get any one of these wrong, it's going to have repercussions in the billions of dollars range. So um, all the decisions that are to be taken when you do a M&A deal are also informed by a financial model at the end of the day, that is calculating, churning out numbers and giving you different possibilities, and then eventually you need to take a decision, a very informed decision, which the model will help you take. Any questions so far? I saw a couple of hands up, so I'm going to pause here to see if there are any questions. Nikhil, you had a question?
Um, I was just thinking, see, to build all these models, we need a basic understanding of what we are doing and stuff like that.
Yeah.
So how much are we going to like be focusing on like understanding a business, understanding the way these income statements and other statements are related, and other things like that that contribute to the overall success of the model?
Oh, perfect. That's a great question, and let me take spend some time on answering that. Um, in this field of financial modeling, there are two parts to it, right? One is the ability to build a model, which is really black and white, because it's driven by rules, Excel formulas, financial rules, all of that. That's black and white. We will definitely be spending some time on it. Most of my students always think that if I know how to build a model in Excel, I am good, I am god. But that's not the case, because your model is as strong as the assumptions you enter in the model. So today, let me show you this assumption. If this assumption of 10% itself is wrong, no matter how robust a model I build, my eventual outcome of the share price is going to be wrong. Uh, Assume a real life scenario where instead of growing at 10%, it's only slated to grow at 2%. My share price becomes $29 then. Now, instead of buy, it suddenly becomes a sell recommendation. I end up giving the wrong recommendation to my clients and they end up losing money. I end up losing money too. So it's very important not just to focus on the financial aspect, but also to focus on the business aspect. And in this class, we're going to talk about both. We're also going to talk about, should it be 2%, should it be 10%? How do you decide what that future assumption should be for the company? So we're going to focus on the business aspects to understand whether the model we're building is robust in terms of the valuation we're coming up with. And we're also going to understand, like, if there's an item in the P&L, how does that flow into the balance sheet? If there's something in the balance sheet and P&L, how does that flow into the cash flow? That part of it, which is the basic rules of finance, we're going to understand that as well. So to answer your question, Nikhil, it's not only just going to focus on the technical aspects of things, but we're very much going to focus on the business and the finance aspect of things, because if we get them wrong, then no matter how robust our Excel and our model is, the recommendation itself will be wrong, and we don't want to do that, right? Because at the end of the day, this is the core, and that's how the industry is also divided. The industry is not just of people who build models. The industry also contains of people who find assumptions to enter into the models and to come up with robust recommendations on buy, sell, hold a particular company. So to answer your question in short, we're going to cover both of them. Does that help?
Yes, sir. Thank you.
Awesome. All right. uh, then what we move on to, sorry, let me pause here to check if there's anything in the Q&A pane. um all right, no questions there. Perfect. So the next part that we get to is hands-on modeling a globally listed company. So this is a really interesting session where uh, up until now we'll be taking real life examples, like the Microsoft and LinkedIn is a real life example which will be, so this entire course is based on such real life examples. Over here we're going to put the onus on the student. Up until this point we were the teachers and you were learning. Until this point the roles kind of reverse. Now you do all the hard work, you will build a model from scratch and you will present it to us. So what do I mean by that? We will tell you, all right, you've been assigned this company called Accenture. I want you to go build a model for Accenture and come back to me with a recommendation on whether I should buy shares of Accenture, whether I should sell shares of Accenture, or whether I should hold shares of Accenture. So here the tables reverse, and now you're the one who's preparing a model and presenting it, rather than the faculty being the one who has a model and who's teaching that to you. So this one's going to be like a complete hands-on exercise where you will actually go to the website, pull annual reports, put them in Excel, uh, like structure everything. No one's going to structure it for you and build a model from scratch. So it's going to be like a complete replication of a real world scenario where people need to build models from scratch. So that's what we have next on the course. And then after that, we have some sessions which are really based on Excel. To we viewed a couple of models where we had things like macros, we had things like charts, graphs, we had name ranges, array functions. So throughout the course, as in when we're doing all of this, module 2 is not a separate module which will take place separately. It's going to be a part of all of this, a part of all that you see here. So whenever we're building models, we're going to be building models hands on, and you're going to be learning a lot of advanced financial Excel, advanced Excel functions to help you build models like the ones that I showed you, to make them dynamic and flexible, so that when someone just asks you to change an assumption, you can do it on the spot rather than asking for more time. All right, so that's kind of what the course outline looks like. If I want to just recap the kind of industries or the kind of domain that this opens up your options in, the first one is equity research, where you will research publicly listed companies and you will give recommendations on whether one should purchase shares of that company or sell them. You will learn private equity. So when shares of company are not listed, but equity investors want to invest in a particular company, what kind of models do you create and how do you arrive at a share price? You will learn about project finance, which is mostly dealing with the corporate. You have a lot of jobs here in the corporate sector and in the big four companies. You will learn parts of investment banking, where you learn mergers and acquisitions. You will learn also credit appraisals, which is a part very similar to models that we build for equity research, but we build them for banks because a bank before a loan needs to decide whether it can give a loan to a particular party or not. What is the chance of default? What is the debt service coverage ratio? What is the interest coverage ratio? So we'll also be looking at some parameters that help us do credit appraisals at banks. And not only banks, there are companies like Crisil that do credit appraisals and give ratings, credit ratings to different companies or bonds issued by different companies. So we'll also be looking at models on those front. So that's kind of the gist of the whole course and the kind of career options that it will open for you. uh, yes, Nikhil, you had a question.
Sir,
Yeah.
can can when we're using these models, can we use these models to this kind of extent when we're managing our personal portfolios and things like that? Will you be also going through that?
Not in this course. It is possible to build models for your personal portfolio as well. uh, if you're investing in stocks, if you're investing in shares of companies, we will cover that part of it, the kind of models that go behind making an investment decision in shares of companies. But if you're when I talk about personal portfolio, there are things like mutual funds. There are different ratios that we look at for mutual funds, evaluating them. Then there's an asset allocation model where we decide how much of a portfolio goes into equity, how much goes into debt, how much goes into gold, how much goes into real estate. all those things, that personal investment is not a part of this course. We're really geared towards equity research, investment banking, corporate sort of a role. Personal finance is more an investment advisor sort of a role, which is not the focus of this course. So if you're looking for that, I'm going to be honest and upfront that this is not the right course for you.
Thank you, sir.
Perfect. Yeah. All right. um, so now here are some sample previews. So I've actually showed you a lot of actual content, so we can probably skip this. um, so this is in nutshell why should you attend the financial modeling program, or in what cases is it going to be beneficial for you. So if you're looking at all these things I've spoken about, if you're looking at industries like investment banking, equity research, commercial banking, if you're looking at investment banking for IPOs, FPOs, you're looking at private equity, you're looking at mergers and acquisitions, we've just spoken about all of this. You're looking at project management, project appraisal, you're looking at commercial banks for credit rating or rating loans. This is all that we just discussed in a nutshell. This slide kind of summarizes it. Um, if you're looking for a career in these industries, if these are things that you learn and you're curious about, if you're already working in these industries but you can't build models and you take a lot of time in analyzing, this is the right course for you. This is where you need to begin and um, start learning how to build these robust models. uh, Again, very similar to what I just said, so I'll probably skip this one. um, what skills are needed to build financial models? I think someone was talking about what kind of background or skills are needed. So as you must have so far figured out, quantitative and mathematical skills are very important. If you're an engineer and you have good math powers, of course you can learn this easily. So there's nothing going to be stopping you. If you're a finance professional and you've already know all the math and logic, again, good for you. But if numbers are not your thing, if you don't like numbers, then this is probably not the best skill for you to learn. In fact, it's a skill for you to learn because you're not that comfortable with numbers. But if it's not required, or if you don't want to build a career in um this space, I mean, if you want to build a career in do not want to build a career in a space where you need to work with numbers, then this is not the career for you, because this is going to be heavy in terms of numbers and maths. So and the course teaches you that, but you also need to have that bent of mind. A lot of people don't, so then in that case, this may not be the right course for you. And then you also need some qualitative skills like business management, the ability to understand a business, the ability to understand where a particular industry is going, understand macro and microeconomic factors to then take robust assumptions about the future. So that's kind of the mix of skills that are required. Of course, in the course we will always be discussing this and talking about these so that you learn them really well, but at the crux, these are the skills that are needed. Apart from this, we are going to be using Microsoft Excel. And like you saw in the previous screens, we have sufficient time dedicated to teach you Microsoft Excel, because this is not a skill that everyone would possess from the very beginning. Apart from this, to Nikhil's earlier question, we'll be covering both the technical aspects as well as qualitative aspects like understanding corporate structure, understanding finance, understanding the accounting knowledge required to know how a P&L, balance sheet, and cash flow statement work. So all of these skills we will be covering in this particular course. Um, so let me go back to the eligibility slide. The minimum eligibility is that you need to either have a bachelor's degree or be in a final year for bachelor's degree. You need to have good communication and writing skills, and have good command over language and grammar. This is important because when we talk about people, and most of the people you worked in the equity research industry or in the investment banking industry, they are people who communicate well. They need to communicate well because it's a very people driven job. You're meeting clients, you're meeting bosses, and you're presenting to them. You need to drive across your investment thesis to them. And mind you, it's not an easy job to do. Building the model is difficult in itself. You need to be able to build a model. Once you build a model and come up with a share price recommendation, you need to go and explain your thesis behind that share price recommendation to your clients, customers, managers, everyone. And in order to do that effectively, you need to be really good at communication. You need to have a good command over English. You need to create the reports, like these reports that I showed you at the beginning. These reports, you need to be able to write your thesis behind your investment, and you need to be able to explain it really well in a crisp language. So communication becomes important in order to ensure that. If you have basic idea about Excel and finance, balance sheet and cash flow, you should be good. But it's not compulsory to have detailed exposure to it, because you will eventually be learning all of this in the course. So that's kind of the minimum eligibility requirements. uh yeah. Then let me talk about some benefits of doing the course. Apart from the skills that you learn, there are some certifications that you also get along with the course. One's the certification of participation. So if you participate in the course, you attend all the classes, you get a certificate of participation. At the end of the course, there is a test that you need to give. And if you clear the test, and it's a test that happens in partnership with BSc, so you'll get something called a certificate of excellence, which is well recognized in the industry. And it also has a BSc stamp on it. It's not just an EduPristine stamp that you get, you also get a BSc stamp on it. And you get a certificate of excellence, which kind of speaks to the fact that you've done this course and you've understood the concepts and you've taken a test which you've cleared, and hence that's going to add a lot more credibility to your CV in general. So yeah, that was about the whole program. Let me talk to you about, actually there's one more aspect to the program. Let me get to that. The program also contains soft skill trainings. I think there'll be a session on soft skill trainings, which goes back to the part that I was speaking about earlier, about being a good communicator, about being a person who can drive your ideas across. So in order to do that, communication and soft skills are really important. So we have an amazing faculty in-house at EduPristine. His name is Dr. Mihir, who does most of the soft skill trainings, and will teach you more about aspects on how do you communicate, how do you maintain yourself at work, what kind of, how do you write mails in general, how do you talk to people, what is the tone you should have. Um, and also in emails, and also we'll also talk about some interview tips, because when you go to an interview, there are certain behavioral aspects that you need to focus on. And a lot of people, no matter how strong they are technically, lack the soft skill part of it, and hence end up getting rejected from interviews or not getting the right job that they're looking for. So we also have this part of soft skill trainings, which is a part of the course. um, all right, sorry to derail so much, but let me go into about EduPristine. But before I go into this, any questions? Okay, I see a question from Pulokit asking what is the package range that one usually gets after completing the FM course. So beginner level, Pulkit, is somewhere around 6 lakh rupees per annum. Uh, and the max is, it has no bar. After a point, you start earning bonuses, and the bonuses can be in crores of rupees as well. Um, but 6 lakh is usually the minimum that I've seen. I did my MBA about 9 years back, and my friends that got placed into this field, equity research sort of a field, got placed at a 6 lakh per annum package. I've also had friends who started at 6 lakh per annum at the very beginning, and then within the third year, they were at 21 lakhs per annum. So it's a rewarding field. You start at about 6 lakhs per annum, which I'm not saying is low by any means, because it is higher than a lot of other industries that we see. So the starting, but it's not as high enough for some. But if you do well and you build your mark in your company, you can even go to the 20-25 lakh range within 3 years of your doing the job and proving your mettle. But it's again, I want to caveat this by saying it's very person dependent. Each person is different and the skill sets they have is different. So how you drive your career is completely on you. But this is what I'm telling you from my personal experience.
Sir, I got two questions.
Yes, Bhagwan.
Uh, yeah. And the first one is whether you are helping in the placement.
Yeah. Uh, yes. So I'll cover this slide now since the question came up. EduPristine does help in placements. They provide resume building services, so you can work with their team to strengthen your resume. They will review your resume for you, make sure it's correctly created. Then they help you with interview prep, how to prep for interviews, and they also give you placement leads. Um, so there is placement assistance.
Okay.
A lot of Let me go to this slide. EduPristine has traditionally worked with a lot of companies in the industry: KPMG, Ernst and Young, Bank of America, JP Morgan, HSBC. So EduPristine has a relationship with all of these companies in the industry, and this is just a very small list. We have a big list of companies that we've worked with in the past. These companies always, whenever they have an opening, will send it out to EduPristine that we're looking for some good financial modeling people. Can you please help us? Can you send us some of your students' CVs so that we can talk to them? So eventually they will help you with the placement leads. They get a lot of placement leads, which they have a portal, they'll post it there. And if you're interested, you can apply over there. um, I in no way I'm saying that there is 100% placement guarantee. It is a placement assistance. So again, I'm being very honest and upfront. It is on you to then go and crack the lead, which also there is interview prep being done for. So EduPristine will give you job leads, will give you interview prep, will help you with with resume building. Uh, and then after that, you need to go and crack the interview on your own based on what you've learned in the course. And we're also teaching you what they'll ask you in the interviews. We're teaching you all the skill sets required for the job. But that end part where you need to go and crack the interview will still be on you.
Okay.
Yeah. But there is
And
placement
my,
assistance that's given.
okay. That sounds pretty good because things would be clear.
Yeah.
And my second question is that, for example, I'm working in some company
Hmm.
where I don't have any kind of requirement of this Excel.
Yeah.
The work profile is such that I'm
Yeah.
not using because most of the time we are generally discussing about the case studies, and solve the problem.
Right.
So in these case, can I take up some freelancing job where some company may give me the work I can do in my private and earn some bucks out of it? Whether that kind of opportunity is available. And the third question, another question also I have.
Hmm.
The third question is that whether what is your hand holding period? Say for example, 9 days training you have thrown. Okay.
Yes.
So after that also I'm going to face the problem.
Yes.
So whether any mentor is assigned, for how many period it is assigned, and what kind of help they are doing. Suppose if
Right.
I am taking some kind of work on a freelancing basis and I am finding some issues,
Right.
and since already the courses are complete, to whom to contact, how to get the support and all these things. If you
Yes.
can just throw some light on that, will be
Sure.
really good. Yeah.
All right. So good questions. Everything I'm going to cover in the next part of the PPT, but let me take them one by one. First, with respect to freelancing, yes, freelancing options do open up, but getting freelancing projects depends on your networking. So it will also depend on your network and your ability to get freelancing projects. But you will have the necessary skills, even if you don't use Excel today. After doing this course, you will have all the necessary skills required to do freelancing, because we will teach you Excel, we will teach you finance, we will teach you business. So at the end of the course, you will be able to build models from scratch, and it's a very hands-on course where you need to bring your laptops and have Excel installed and work during the classroom. So it's not like a theory session where a faculty will come talk to you about a concept, you will take notes on paper and will go. You will actually build models in the class. So it's a, with virtual, I think it's given that you will have to bring your laptops, but you will be working on the case studies as well, and all of them you'll be building models throughout the course. So I hope that answers your second question. With respect to your third question, let me go to another slide that I have, which is this one. First, it's not just a 9 days course, it's a 14 days course. There were another 5 sessions also over there, where we talked about Excel. So it's overall an 14-day course, which is consists of 70 hours of exhaustive classroom training. Each class is a 5-hour class. And then we have Excel workbooks. You will get all the Excel workbooks that we will be working on. You will get all the recordings of all the classes you've been to, so you can revisit them in the future if you want to. You will get comprehensive notes in the form of PDFs, Word documents, PPTs, everything, so that you can refer to them in the future. You will get a certification. We spoke about that. We will be using a case study approach, where we'll be using hands-on Excel, and we'll be solving some real life case studies. And for support, there's this forum on doubt solving which you will have access to, where you can at any time put your doubt. EduPristine will put you in touch with any faculty all over India, and that faculty will solve your questions. uh, with respect to the question that you asked on the time frame, that's a very important one. EduPristine will provide you access to the content for the next 1 year, not just the 14-day period. So for the next 1 year, even if you want to re-attend a class in a future batch, you will be able to do that, but you'll have to take the necessary permissions from EduPristine. We don't want people abusing the system, but at the same time, we want to be as student friendly as possible. So if you miss a particular class out of these 14 days and you still want to attend a live class, there are batches that keep on happening parallelly. Just reach out to your EduPristine coordinator, and they will put you in another batch where the same topic is being covered, so you can have that live experience again. And this will continue for 1 year. So for the next 1 year, you can attend as many live classes as you want, of course, without abusing the system and taking prior permissions. And you will also have access to the Excel workbooks, all the study content, the recording of sessions, and the online support. They will provide you with an access to something called LMS, which is the portal for learning that they have. So you'll get credentials to that, which will be where you can get all the content that you need. All right. uh, does that answer your question?
Yeah, yeah. Really, it is. You have covered so many things.
Awesome.
Yeah, which comes out to my mind that suppose say after 14 days classes, if say some class I couldn't understand earlier also, I want to repeat that,
You can.
or all the classes I want to repeat. So within 1 year, you mean to say that by taking prior permission, we can attend as many as classes which are going on, isn't
Right.
it?
Right.
Repeat
as
our.
as long as you're not abusing the system, you should be able to. I am technically
Taking,
not an EduPristine employee. I'm a
we will
faculty
take
here
we
at
will take
EduPristine.
we will take permission, prior permission.
Yes.
Then there is no case of abusing, I believe.
Yes, you should be
Yeah,
able to.
yeah, yeah. Thank you so much, sir. Thank you so much.
Yeah.
Because these are the small things which are necessary to take a decision.
Right, I understand. Yeah.
Yeah.
All right. So, but before we go further, there are some things about EduPristine. Now, EduPristine's a company that's run by this MNC called Adtelem Global Education. It's a global education provider headquartered in the United States. The founders of EduPristine were Indian, and were working with companies like the ones that I showed you here. They just felt this need for financial modeling, and this gap between the industry and the uh, uh, students coming out of college. Like there's this huge gap between what people are learning and what they're expected to do on the job. So they started this course on financial model. They started EduPristine. and since then it's been taken over by this global MNC because of the potential it had, and now it's become a lot more professional. You'll see a lot more standard stuff, global standards that are there in the course, and a lot of students that are attending courses of EduPristine. There's a large network of alumni. More than 50,000 students have taken courses from EduPristine so far. There are 6 major cities where we have live classes, in-person classes. There's a faculty pool of more than 600 industry experts. All the faculties are industry experts. Like for example, I'm a faculty with EduPristine. I'm not an EduPristine employee, but I work from Monday to Friday, and on weekends is when I teach. So I'm very much in touch with the industry. And then there's soft skill training and job assistance. We spoke about the soft skill training. Course and guidance support also answers Bhagwan's question to some regard. There'll be a portal called LMS where you will get all the course material, Excel files, schedule of upcoming sessions, all your it's like the central repository where you'll get all the information. It's called Learning Management System, LMS. You have a doubt solving query where a course expert will reach out to you in 24 hours to solve any questions you have, so you can just raise it on the forum. There's this email ID where you can get support, so you can reach out to the email ID, and there'll be frequent seminar and webinars taking place which you will be invited to as well. So that's kind of a course guidance in addition to what I just showed you before this. Faculties are really industry experts, people who do the work and not just give you the theory of the work, people who are actually working in the industry doing the job day in day out. They come and teach you. They are experienced and certified. Regular feedbacks are taken, so if your feedback about a faculty is not great, the faculty they can change it. But we've created this pool of 600 plus faculties with an average rating of 4.68 out of 5. So most of our faculties are time tested and they have really strong uh, ratings in the past. So you'll have no complaints with respect to the faculties as well. We covered this placement assistance. We covered some of the top clients that EduPristine has delivered trainings to. Some big universities like the IIM, ISBs, BITS Pilani, National University of Singapore, NUS. These universities have called EduPristine to train their students in financial modeling as well. So these are some very high level reputed names that have in a way kind of also approved the content that we provide. um, we spoke about the program offerings. If there are any questions on this, let me know. You can enroll ASAP. I'm guessing you are in touch with some or the other EduPristine coordinator. So your next step would be to reach out to them, talk to them about your course fees, uh, talk to them about your course fees, with the next batch start date. All the requirements will be given to you by your EduPristine point of contact. uh, y- just a tip from my side, do ask for a discount. I'm sure they can work something out. If you're attended this seminar, they usually end up giving some discounts as well. So go to them, talk to them, and they'll help you out. All right. With that, I'm kind of done, guys. So I'm going to go to the Q&A pane, go through some questions and try and answer them. In the meantime, if you have any questions, feel free to ask them, put them in the question and answer section, so on and so forth. I think I have a question from Yash, which says, what if I opt for online course? How is it different from this one? Yash, my understanding is that the online course will be a set of pre-recorded sessions that you'll get access to. I'm not sure if the content will be different. That's a question for the EduPristine point of contact. So if you can just reach out to them, they'll be able to help you better with that. But my understanding is it'll be a pre-recorded video which you have to look at your leisure, pause, repeat everything, and but you won't have the ability to ask questions real time over there. I think that's one very important benefit you lose out on. um, Pulokit says that he has experience in taxation and compliance. Will the account payable profile be helpful? So Pulokit, you'll probably be like a starter in this industry. Your experience is relevant in the sense that you know a lot of the background in finance that is required. You probably have all of that background, but if you start in this industry, you will probably be considered as a fresher. You won't be a person, your 6 years of experience won't be given a lot of weightage. It will probably be given some weightage, but if the starting package is 6 lakhs, you'll probably end up at around 7 8 lakhs. But I don't think you'll get what 6 year experience people in the industry get. Ashwini says, after doing this course, what profile you get in job? I mean, what kind of companies can I target and for which? Ashwini, that's the whole list of companies that I shared before. JP Morgan, Credit Suisse, Barclays, HDFC Securities, ICICI Securities. You can work for any of the investment banks and equity research companies. You can apply at credit research companies like Crystal's and commercial banks. You can apply at corporates like Vodafone, like any Reliance, any corporates. Corporates also have requirements for project financing jobs. So it will open up a lot of career options for you in terms of jobs. Nikhil has a question where he asks, can we have a mix of online and offline classes? I think, Nikhil, the mix is that you enroll for the online class. If you cannot make it to the online class, wait, actually, what do you mean by offline classes? You mean in person
Yeah,
classes?
in-person classes, sir.
Oh, so in person classes, because of the pandemic, it's closed right now. So we won't have in person classes. We did start them again back in Feb, but again, because of the second wave, we had to shut them. So once the pandemic closes, again, offline classes will open again. But I don't see that happening right away. It's some time before the second wave is behind us. Uh, Ayush has a question on whether we can use Google Sheets for FM instead of Excel. That's a good question, Ayush, not a silly question. Google Sheets are helpful because it helps you collaborate better. We found different ways to collaborate using Excel. With Google Sheets, the problem is your macros and a lot of native Excel functions in Microsoft Excel don't work. So for now, Google Sheets has a lot of limitations, so we won't be able to use that. A lot of features that we want to add in our models is not possible through Google Sheets. All right. With that, I think I've answered all the questions. Any follow up questions, guys? Any other questions? If not, I know we're 10 minutes over time. Thank you so much for your time. Sorry for exceeding, but it was great interacting with all of you.
Sir, sorry.
Yes.
Uh, what's the cost of this course? I didn't see
Uh,
that.
the cost, you'll can you reach out to your EduPristine coordinator, please? I'm not sure about what the cost structure is. Last I heard, I think it was around 35,000 rupees or 36,000 rupees. I don't know if there's been any change to that. Uh, So I'm probably not the best person to answer that. If you could just reach out to your EduPristine coordinator, they'll help you out with that.
Thank you, sir.
Yeah, perfect. All right. Any other questions? I'm happy to stay back. I know we're over time, but I'm happy to stay back for some time and take any other questions. So if there are people that are not comfortable asking questions in the large group, and if you want to wait, I'm happy to stay back and take any questions. But if not, I've kind of covered what I wanted to. So thank you so much for your time and thank you so much for attending. It was great interacting with all of you. And look forward to see some of you on the course. All right, looks like there are no other questions. So I'll probably end here. Thank you so much, everyone. Have a great day. Have a great weekend. Bye bye.